I am very happy you are all here. We've got a wonderful speaker. He's going to educate us on the money that's out there for us. His name is Raymond Graves. He's the leading specialist for the SBA Cleveland District Office of the U.S. Small Business Administration, and he is responsible for lender and entrepreneur outreach activities in the areas around Cleveland and Toledo. Ray grew up in Shaker Heights and is pleased to call Shaker Heights once again his home after a few stops in Boston, Columbus, and Chicago. So welcome back, Ray, and welcome this morning, and we look forward to hearing all the fun information you have for us. So take it away.
Great, wonderful. This is Ray Graves with U.S. Small Business Administration, and Karen, wanted to thank you and for the other chambers involved as well to give me the opportunity to get the word out to some small businesses about what SBA's got going as far as this crisis response in this uncertain time. Of course, so many people already have accessed some of the funding mechanisms that are out there. But I think you'll find this presentation to be of value and provide a little bit of additional information. So what I'm going to do is to first of all share my screen, and you should see that. If not, then Karen, pipe in and let me know that you're not seeing it. But I'm going to go ahead and advance some slides here, and we'll get started. So again, I'm Ray Graves with SBA. I work for the Cleveland District Office, which is a field office of the SBA. We have about a dozen people working on staff here in Cleveland. We cover the northern 28 or so counties of the state. So from the Pennsylvania line to Toledo is our coverage area. I just want to make that clear because I don't work for SBA's Washington D.C. policy shop or anything like that. I'm just a field employee, which means that I try and make sure word gets out in our own community about the programs SBA offers. So today, what I want to talk about is these 5 points on this agenda. Number one is it's still possible to get a loan for a business expansion. Number two, what special preparation should small businesses take prior to applying for a loan? Number three, what special incentives are available for the SBA right now? Number four, where can a business owner turn for help and guidance? And number five, recognizing that many small business owners have participated in the Paycheck Protection Program, will provide an overview of the PPP forgiveness application. So we'll be spending a little bit of time with that as well. If you have any other questions, hopefully we'll have some time at the end. But I certainly don't mind if you raise your hand or if you want to jump in with a question. That's perfectly fine as well. I don't mind that at all. The more participation, I think, the better. If you've got a question, everyone else probably has it as well. Okay, so moving forward. Is it possible to get a loan now? Well, yes, lenders are still reporting lending activity. Now, some businesses that are in certain industries are going to face a lot of scrutiny. So if you're in the hospitality industry, if you're a restaurant or a bar, I think it's going to be understandably really tough to get a loan right now. But many other types of businesses in this weird economy we have right now are actually doing quite fine. I was talking to a company yesterday. They said they had a couple of different divisions. One was a little bit more retail, and one was a little bit more wholesale, and the retail was doing poorly, but the wholesale side was doing fine. So I think it just depends on the kind of business you're in. Grocery stores might be doing fantastic, but a coffee shop might not. So depending on who you are, you may have a great chance to get a loan, and it may be a good chance to get one. So many businesses are doing well, some are not. What we see at the SBA is our fiscal year to date. Typically with our traditional 7A loan program, which is a guarantee program, meaning a bank makes the loan and the SBA guarantees it. Of those, typically nationwide, we do about 50,000 a year. Last year at this time, we were at about 38,000. This year, we're at 30,000 loans. So, it's down for sure. But there is still quite a bit of lending happening. And this doesn't include the PPP program or the EIDL program. So I guess the message is it is still possible to go out and get a loan for some purpose, like whether it's to buy a property or to buy personal protective equipment or to reconfigure your location to deal with the crisis, or if you're pivoting your business in some way to do more e-commerce or whatever the case might be. It's certainly possible to get financing for that at reasonably good rates right now. SBA 504 is another big loan program for us. That's actually up this year over last year. The 504 program is more for real estate and heavy equipment, and we actually have a pretty good expansion on those. Our third loan program, the microloan program for really small loans and for non-traditional types of businesses, is pretty steady with what it was last year. So is it possible? Yes. For many businesses, it's certainly possible beyond PPP, beyond EIDL, to get access to capital. However, my next slide here, slide 4, is really telling people that you need to have a little bit better preparation, a little different preparation when you approach banks in this day and age. Lenders are going to want to see an updated business plan for sure. They're going to want to see how you're dealing with the crisis. So be prepared, especially financially, to show how the numbers of your business through June 30th, 2020 compare with June 30th of 2019. So if you're not sort of used to, when you're talking to your banker, your lender, showing the comparable numbers from last year, I think you're going to have to be prepared to do that this time. So know how your business has been affected. Have you been substantially impacted? Are you still able to meet your short-term needs? Have you made reasonable projections for 2021 that's backed by, a comparable period from 2019? So just think about having those sorts of numbers in front of you as you talk to a lending partner. Be prepared to answer questions like, what strategies have you undertaken to protect your employees, protect your customers, and protect your and pivot your business to a model that makes more sense in this environment. And moreover, not just that you have those things, but how have you communicated those sorts of changes to your employees and to your customers? Because it's one thing, of course, to do it, but it's another thing to make sure everybody knows that you're taking care of them. I think customers want to see that, employees want to see that, and so on. Make sure that you understand if your personal or business credit has been impacted. For a lot of folks, they've had interruptions in income, and they might have had to run up credit cards for a little while, or maybe accounts payable for the business have been affected. So make sure you're aware of what's happening with your personal and business credit. Last point here is, if you received an economic injury disaster loan or a Paycheck Protection Program loan, your lender is going to want to know about that, and they're going to want to know when your payments are going to have to start and how those loans are reflected on your financial statements. Of course, they should be, at least temporarily, on your balance sheet. Once the PPP loan is forgiven, of course, it would wipe that off of there. With an EIDL, it could stay around on your balance sheet for potentially 30 years, because those are relatively long-term loans. Turning now to what incentives are available. So from the very start of this crisis, the thing that the SBA had sort of off the shelf was this economic injury disaster loan program. And EIDLs have been around for a long time. Traditionally, they've been deployed where there's been a hurricane or something like that. In this crisis, it's a nationwide program. And this loan is a working capital loan, directly available from the government through our website. These are 30-year working capital loans. That's very unusual, because usually a working capital loan is going to be 5 or 7 years, maybe even less. With 30 years to pay off a working capital loan, you have a really long time to pay the loan back. The rate of interest is okay. It's 3.75% for a for-profit company and 2.75% for a not-for-profit. It's a full year of deferred payments. So it's a very nice loan, unsecured in most cases. In some cases, where there's going to be a loan of $25,000 or more, there is a lien on business assets. In most cases, there's no personal guarantee. So it's a nice loan, but you do have to think about it, because it's fundamentally, obviously, not a grant. An economic injury disaster loan is a loan. You are expected to pay it back. So certain types of things that might make sense to do with a PPP wouldn't make sense to do with an EIDL, because you can pay people's salary with an economic injury disaster loan, but does it make sense to borrow to pay employee salaries? Maybe not. It really should be something that has some value in terms of making money for your business, increasing profitability or making it stable. But uses of proceeds for an EIDL could be, paying down accounts payable. It could be installment payments on debt. You could use it for personal protective equipment. You could use it for inventory. You can use it for utility payments or rent payments and things like that. It's not supposed to be used to buy a piece of property or buy a piece of big piece of equipment or anything like that. It's not supposed to be used for refinancing debt that you've got out there. You can use it for debt payments, but refinancing a balance is not what you're supposed to be doing with it. Again, it's a working capital loan. It's designed to try and get a business from point A in this crisis to point B when the crisis is over, and keep the business viable with its fixed payments through that period. Hopefully that makes some sense. The next incentive that we put in place was this concept of SBA debt relief. And SBA debt relief just means that on any of SBA's typical loan program products, which I've alluded to before, the very first slide, the SBA 7A loan guarantee program, loans made by banks, guaranteed by the SBA, paid back to the bank, SBA's 504 bond market program made through certified development companies, or the microloan program made through not-for-profit intermediaries like ECDI. For any of these three loans, if you're getting an SBA loan, Uncle Sam is going to make 6 months of payments for you. So that is a fantastic deal. Use of proceeds could be pretty much anything. You could use it for working capital or equipment or real estate or refinance of other debt. Anything that's a legitimate business purpose, you can use one of these loans for. 7As are the most general purpose. 504 loans typically are just real estate and heavy equipment. And as I said, microloans are small working capital loans, non-traditional. But with these three programs, basically whoever you are on the entrepreneurial journey, if you can show repayment ability, you can get one of these loans. And knowing that SBA is going to make 6 months of payments is a good deal, not only because it's just kind of a grant for you, right? But also because it helps get small business owners and bankers and lenders beyond thinking in the short term, what's going to happen in the next month or next 2 months or 5 months, but really thinking more in terms of 6 months from now, when things are different. At that point when payments are going to have to begin again, what's the business going to look like at that point in time? Hopefully we have a vaccine. We don't know. Hopefully conditions will be better. But we think at the SBA that if we get lenders and small business owners thinking more in the long term and alleviate the what's next week crisis coming, that we can get more access to capital available for small businesses. So again, this is a program that is available today. It is for loans that are going to be into regular servicing by September 27th. So there's a limited time frame when it'll still be available. But within the next couple months, if you want to get one of these loans, you will have the benefit of the payments made by the government. All right, finally, in the incentive picture is, of course, the Paycheck Protection Program. Paycheck Protection Program has gotten, of course, very, very famous with so many loans being made, propping up so many small businesses and helping so many small businesses meet payroll during this crisis. I think there are something like 5 million of these loans out already, and it's an amazing thing because the program didn't even exist until sort of end of March. The Paycheck Protection Program is available through August 8th, so there is a very limited amount of time to continue to get one of these things if you haven't gotten it before. The program is much better now than when it originally came out, so if you turned down the opportunity to get a PPP, it might be useful now to reconsider that. A PPP loan is a loan that is the loan amount of which is based on 2.5 months of your 2019 payroll. So again, the loan amount is sort of an arbitrary figure of 2.5 months of 2019 payroll. You figure that out and you do the math, and that's your loan amount. The loan funds can be used for very strict things: payroll, interest, utilities, and rent, just those things. An economic injury disaster loan is a little more flexible. A typical 7A 504 microloan is much more flexible. The PPP program is very, very defined: payroll, interest, utilities, rent. If certain thresholds are met, our part of the loan may be forgiven, and by forgiven we mean paid off by the government, because a bank makes these loans, or a credit union, or some other lending institution. They make the loan to the small business. At the end of the period when the money is spent, the applicant makes a request to the bank, and the bank turns around and makes a request to the government. And if all the conditions are met, the government pays off the bank, and then the bank says, "Hey, poof, your loan is completely wiped out." So this is a really, really good deal because it amounts to a grant for the business owner, and it's really the intention there is to keep people employed and keep the business up and running. And if the business has any revenue at all, hopefully it's making some money with keeping the staff in place as well. Amounts that are not forgiven, if they're not forgiven for any reason, are amortized at 1% per year rate of interest over 5 years. So even if you don't have the loan forgiven completely, it's still a very, very good deal because a 1% interest rate is practically a nominal rate, and 5 years is plenty of time to repay whatever isn't forgiven. These loans additionally have no collateral and no personal guarantees, meaning there's very little risk to the business owner to get them. We're guaranteeing the bank on the other side 100%, so the bank has almost no risk whatsoever in making the loan. So it's a great way for the government to sort of engage with the private sector to get access to capital out there. Finally, if you're interested in more information on sort of the overview of the program, the Treasury's website, treasury.gov, has a lot of really good information, including the fact sheet that I've listed there below. So, where can a business owner turn for help? That was, I think, bullet point 4 in our slides here. Fortunately, the CARES Act that improved the PPP program also provided some additional resources for our small business development centers. I don't know if my friend Katie Van Dyke is on the call right now, but if she is, I'd invite her to unmute herself and say hello. But small business development centers are across the whole country and just across Northern Ohio. There we have it, Katie. Why don't you talk about small business development centers and what you can do?
Okay, great. Thank you so much. So the small business development centers are funded by the Small Business Administration as well as the Ohio Developmental Services Agency. And my particular center is hosted by Cleveland State University. We also have SBDCs at the Urban League, the Hispanic Business Center, Lakeland Community College, and Lorain County Community College are the closest ones here in Northeast Ohio. We all work together very collaboratively, and all of our services are free. Because of the CARES Act, we do have funding. My center in particular, we all kind of did different things with the funding. Mine decided to bring in 8 specialists to work with existing businesses on subjects such as cybersecurity, HR, export training, team development, financial matters, and preparing. And we also have a restaurateur to work with people that own restaurants and getting them to back up and functioning. So we do have a list of webinars that we're offering, and then those specialists can do one-on-one advising, and we're supporting that so that our small business clients can be supported and successful during this tough time.
Wow, that's amazing. Could you mention the different disciplines you brought on board again? I think you said 8 of them.
Absolutely. We have 8 of them. I'm trying to remember all of them. Cybersecurity.
So human resources. Yeah, cyber. Wow. Okay.
Financial management during tough times. We've got a restaurateur who will be supporting restaurants as they reopen, and just like managing staff and different issues. We've got 2 marketing specialists. One does geofencing, and the other one helps to get businesses that are used to operating in person, getting them up online and starting to sell things online. We also have a person who helps with, we're working with our Export Assistance Network. So we have 2 exporting people to help better understand culture training and things like that, as well as general HR, team building, and working through some issues that might come up with teams during this tough time.
And what kind of fees do you charge for all these services?
So because of the CARES Act, we are paying the consultants so that they can work for free with our clients.
Is there any sort of sunset provision on that, or is that for the foreseeable future? Or?
It is. We have budgeted out through the year, so our program starts August 1st, and we will be we have certain hours budgeted because of our funding, but we plan on working with existing businesses until the funding runs out. So we have a certain amount of hours per existing business to work with the consultants, and we're here to support our small businesses.
Super. And I hope certainly you can reach any of the SBCs through the link that's on the screen right now, but hopefully you can put your contact information to the chat so folks can reach out to you if they need to. Okay, other options, SCORE, Service Corps of Retired Executives, which is the SBA's mentorship program, is active as well. They've designated a Tiger team to help people with PPPs and IDLs. That's cleveland.score.org. Don't just Google Cleveland Score because the Tribe Score will come up. Thank goodness we've got baseball again. Instead, look for cleveland.score.org, which is the mentorship program that's supported by the SBA. The thought process there is, the federal agency itself employs folks like myself who are professionals, but not many of us have the actual small business experience directly. So all of the SCORE mentors are business owners or former executives that volunteer their time free of charge, strict confidentiality, to help mentor small business owners and help get them through tough times as well. So look for them. Also, the Women's Business Center here in Cleveland is available as well to do advising for women-owned businesses that want to take advantage of their services, and the link is there for them as well. So lots of really free or really low-cost support out there for everyone who has questions and just needs somewhere to turn to bounce ideas off of, get business plan help, human resources, cybersecurity, whatever the case might be. There's lots of resources out there right now for people. Take advantage of them. Okay, the next section here is everybody wants forgiveness for their PPP loan. So as of July 6th, there were 140,000 PPP loans in Ohio, and most of them are going to be submitting for forgiveness applications on or around August 10th. So this is a timely program. Wanted to make sure that we address that specifically. But before we get in the weeds on the PPP forgiveness, if anyone has questions on some of the other agenda items we have, now would be a great time to talk about that before we sort of get lost in the PPP forgiveness program. So does anyone have any questions on working with lenders or what to expect when you talk to your banker? And does anyone have anything on the economic injury disaster loan that they'd like to ask? I'm sure there might be some questions in the chat, but I'll have to get to those at the end of the presentation too. Okay, hearing nothing right now. There's ample time for questions and answers at the end. So let's talk about the forgiveness app. Again, the PPP program is the Paycheck Protection Program. These are the forgivable loans that are through a bank or through a lending institution that will be paid off by the SBA. The forgiveness application that you're going to have to write up for your lender, if you've got one of these loans, is the SBA Form 3508, Paycheck Protection Program for Forgiveness application, or the 3508 EZ application. My point here is that if you are either one, if you're using the EZ application or the normal, the full documentation one, you're going to need both the form and the instructions, and the URLs to locate them are both here. But it's just like a typical IRS sort of form. You can find the form, but you also need the instructions as well. So make sure that if you're working with this, you definitely need both. You can't get away with just trying to get the form and fill in the information. You definitely need the form and the instructions. When they first rolled out, they were part of the same document, but somebody thought it'd be a great idea to make the document smaller by dividing it in two, and so I guess that's what they did. Make sure you have both the form and the instructions. Spend quite a bit of time before you even start thinking about filling out the form or calculating the forgiveness amount. Make sure that you familiarize yourself with the documentation that you're going to need. Documentation requirements are at the back of both of the 3508 and the 3508 EZ forms. And the information you're going to have will include information on pay rates, compensation amounts for individual employees on an individual employee basis, headcount information for various periods, and by headcount I mean full-time equivalencies, rent, interest, and utility payments over various periods as well. So I would recommend taking a morning when you're nice and fresh and thinking about and trying to get together and gather together all of the information documents you need, and then the next morning come back and try and actually get through the forms and things. Getting the documentation is kind of the whole ball game in this. If you've got the documentation, I think it'll be relatively straightforward to get through the apps. If you don't, it's going to cause some headaches. So work on that first, documentation first. The 3508 EZ is a shortened version of the 3508 full forgiveness form. These are the forms that you're going to need to give to your lender that they're going to then turn around to use to calculate your forgiveness. The object of these forms is to get you complete forgiveness on the entire loan. The 3508EZ is what hopefully you can use because it's a shorter form, less paperwork. But you can use this if you're a Schedule C filer without employees, or a borrower who did not reduce pay rates and did not reduce hours worked by the end of the covered period. So you didn't reduce pay rates and you didn't reduce headcount, or you did not reduce hours, but you did have to reduce hours. You did have to reduce your headcount, but it was because of official guidance. Fundamentally, everybody needs to understand with the PPP program, what the agency wants you to do to get full forgiveness is to bring everybody back and pay them what you were paying them before. If you did that, if you brought everybody back and you paid them what they were being paid before, you're going to be in good shape. If you had to reduce salaries, or you reduce headcounts, well, in that case, you have to figure out whether or not there's going to be a reduction in your forgiveness. So, line 1 on this forgiveness on the EZ app is for payroll costs. And this is a big number. The payroll cost includes capped compensation for employees, it includes employee benefits, and capped compensation to owners as well. Owners and employees both have different maximum compensations that are forgivable, and owners are further capped by applicable compensation in 2019. So you have to pay a lot of attention to what's going on in this line 1 payroll costs. Line 7 here, down at the bottom, is really the one way where you could have a reduction in your forgiveness if you're able to use this 3508EZ form. And that is if you did not use enough of the proceeds that you're trying to get forgiveness for on payroll. The rules are you have to use 60% of the PPP proceeds on payroll costs. So that's the line 1. If you didn't, if you used only a small amount of your proceeds on payroll costs, line 7 here provides this upper bound for your forgiveness amount. So for example, if you had a $10,000 PPP loan and you only spent $5,000 on payroll, well, 5,000 divided by 0.6 would come up with this number of about 8,300. And even if you spent the other $5,000 on eligible things like mortgage interest payments and rent and utility payments, you still wouldn't get full forgiveness. Why? Because you didn't spend 60% on payroll. The maximum you would get if you spent $5,000 on payroll of a $10,000 PPP would be $8,300 or something like that. So again, this EZ form is very useful. It basically means that if folks can just assert that they didn't reduce pay rates and didn't reduce hours, you can go straight to this. And the only hurdle you really have to overcome is you have to make sure that you spent the majority of this money, the super majority of this money on payroll costs. And then you should be in good shape. You should get full forgiveness for your loan. If you did do something that wasn't recommended and you reduced headcounts or you reduced payroll rates, then you might have to use the full form, the 3508 full form. And if you're doing that, that's fine. But understand then there's going to be a little bit more paperwork to do. So there are 3 things that you're going to need to do, and you sort of proceed from back to front. There's something called a Schedule A worksheet of the Form 3508. You'll need that. You'll need the Schedule A, which is on page 3, and you'll need the forgiveness calculation form itself, which is on page 1. Each of these things in the separate document have instructions associated with them. And again, you need both the worksheet, the Schedule A, and the form, and the associated instructions. On the worksheet page, there are 2 tables that are important. Table 1 lists employee by employee, anyone who received compensation in the covered period directly after when you received the loan. It excludes owner employees and anyone who had a high pay rate. So you're going to include the employee's name, their EIN, the cash compensation that they received as capped, what their full-time equivalency was during the period, so their average weekly hours worked. If there are 40 hours a week, that would be 1. If it's 20 hours a week, that would be 0.5. And then in the last column, you'll see the salary or hourly wage reduction column. That is going to require for each employee a simple sub-calculation or a sub-routine, is what I say here, which calculates if you reduce their pay rates, what the reduction to your forgiveness will be. So hopefully you have no reductions, and hopefully this box 3 is nothing. But if you did have reductions in pay, you were obliged to make or you had to make, it's going to calculate through on this table what the penalty to your forgiveness will be, which again is not what you want. Now, table 2 lists individuals who did have a higher pay rate. And a higher pay rate means anyone who had a pay rate of $100,000 per year of any period in 2019. And they also received compensation during the covered period immediately after you got the PPP loan in 2020. This form treats these individuals differently. So again, table 1 is for lower paid employees. Table 2 is for higher paid employees. And you'll notice on table 2, there isn't a salary or hourly wage reduction column at all. But this is where you would put in your higher paid employees. Moving forward into the form on Schedule A, the good news here is lines 1 through 5, you're just pulling stuff over that you already calculated on the worksheet. In lines 6 through 8, you're adding in additional non-cash compensation paid on behalf of employees. So on the worksheet, you were just adding in the cash that your employees received. On Schedule A, line 6 through 8, you're adding the other things like employee health insurance provided by the employer contributions for retirement, and employer state and local taxes assessed on employee compensation. So that's where you're adding those other amounts that are payroll costs, but aren't actually the gross compensation that the employee gets. On line 9, if you've been wondering, is finally where we put in compensation paid to owners. Anybody who's got any ownership in the company, line 9 is where we're finally going to put in their compensation. On line 10, you have a summary of all compensation during the covered period. So all compensation, but as capped. If there's folks that get paid very high amounts because there are caps on employees and caps on owners, it could be the case that compensation paid during the period might be higher than this, but that'll be in a minority of cases. Usually, this will be a summary of the payroll costs in total. Now, the next section down, the full-time equivalency, calculates any reduction in forgiveness that a borrower might get as a result of reducing headcount. Fortunately, there are a couple of safe harbors here as well, which we'll go into detail on I think, a further slide. But if you reduced headcounts, what happens is on lines 11 and 12 and 13, you sort of compare your headcount during your covered period directly after you get the loan with your headcount during a reference period you choose. And you divide by one by the other. And if it results in a fraction, that fraction will be applied against your forgiveness. So for example, if you had 9 employees during the covered period after you got the loan, when you were supposed to bring everybody back, but you had 10 employees in your reference period, well, that's 90%. So you're going to have that 90% applied against what you otherwise would be forgiven on your loan. So hopefully that didn't happen, but if it did happen, there are some safe harbors. So safe harbor 1 is what I call the activity safe harbor. If you were unable to operate between February 15th and the end of the covered period at the same level of activity due to compliance requirements and guidance from government, the quotient on line 13 is 1. No matter if you had 10 employees in the reference period and 5 employees during the forgiveness period right after you got the loan, if you did that because of guidance, government guidance, you're going to have 1, even though it should be 50%, you're just going to put in 1. A second safe harbor is available as well, the rebound safe harbor. This applies when a business decreased headcount initially, but later was able to bring the headcount back up to what it was on February 15th. So that could be helpful for people as well. Again, if you had to reduce employees originally, but you were able to bring them back to what it was on February 15th, that's another safe harbor, and you'll be able to avoid any forgiveness reduction there. All right, we are on the home stretch here. So this is the very first page of the form where finally at the end we'll calculate our forgiveness amount. First thing you notice here, of course, is just the typical identify the business information. Just make sure you double check, make sure everything is exactly right. It causes no end of problems if someone puts in their EIN or SSN wrong. Make sure you put in your PPP loan number right. Make sure you accurately enter information if you got an economic injury disaster loan advance grant, not the loan, but if you got an EIDL advance grant, make sure you put that number in there with your EIDL application number. That's very important. Lines 2 through 4 are where we're finally now adding non-payroll eligible costs. You may recall that the PPP loan can be used for payroll, it can be used for interest, rent, utility. So everything to now has been payroll costs. Finally, on lines 2, 3, and 4 here, we're adding eligible interest and rent and utility, anything that you paid during the immediate period after getting the loan. As long as it was an obligation that predates the crisis, you'll be putting those amounts in here. Note that it's not the full mortgage payment, but just the interest on the mortgage payment. Rent and utility payments during the period as well. You would stick those in there too. Line 6 is all eligible costs minus any rate reduction related penalties. So again, back from that worksheet, if you reduce pay rates and suffer a penalty because of that, that's where you're going to figure that in. Line 7 is where we're figuring in that reduction quotient, which is only going to happen if you reduced employee headcounts and also didn't have a safe harbor. So line 8 is the forgiveness modified by pay rate reductions or headcount reductions. Line 9 is the PPP loan amount itself. You can't get forgiveness for more than the actual PPP loan amount, which is logical, so that's where you put that in. And line 10, much like on the easy form that we went through the very first time, is any reduction to forgiveness that you might suffer as a result of not paying enough of your loan for payroll. Again, you have to use it at least 60% of the proceeds of this forgivable loan for payroll in order to get full forgiveness. And the lowest of lines 8, 9, and 10, well, that's your forgiveness amount. So again, hopefully when you've gone through this whole exercise, you can do full forgiveness on your loan. One other item that's important that we now need to discuss is what happens to the forgiveness amount if you had an idle advance. We talked about the economic injury disaster loan as one of the first slides. That's just a traditional loan. But through a very long period of time, we were offering advance grants on idle loans. And those are typically loans grant amounts from $1,000 to $10,000 that just showed up in people's accounts if they applied for it. And any amount that was granted to a business already through idle advance, again, the idle advance grant, not the loan, but the grant, will be deducted from the forgiveness of a PPP. So let's say you got a $10,000 idle advance grant, cash showed up in your checking account, and you also got a $100,000 PPP loan. Even if you calculate your forgiveness and it's $100,000 on the PPP, the amount of your PPP forgiveness will actually be reduced by the amount of the grant you already got. So if it was a $100,000 PPP loan and $100,000 forgiveness was calculated, the actual forgiveness SBA would grant would be $90,000 because we would have deducted that advance grant. And that $10,000 that's left, well, that would turn into a 1% interest rate loan over 5 years, unsecured. So not a bad deal in and of itself. All right, that is the presentation that I had. Again, there's my contact information, and I would love to take questions if you got them.
Okay, so I heard somewhere if you had under the 150,000, you were forgiven the whole loan. Is that wrong?
You know, there have been discussions in the news that they're going to do, some kind of blanket forgiveness, but that would be a question to ask your your representative or your senator. I as a member of the bureaucracy, I can't even comment on it.
To not ask your bank?
You could ask the bank as well. But as of right now, I'm not aware of any final blanket forgiveness. Obviously, if they said, hey, anybody that has a PPP loan under 150 is going to get complete forgiveness without having to do an application, that would make everyone's lives a lot easier. But at this date, I'm not aware of any full approved plan to do that.
And is your FICA and your state and your city also forgivable?
I would say the way that you have to look at the form and the way it reads, but employer paid benefits on employee compensation are included.
So FICA is not included, but city and state would be included, right?
I'm not really prepared to say like FICA or FUTA. I'm not an IRS person, but if you can define it, based on what's on the form, that's the best I can do for you.
Okay, so you don't know about the 150,000 yet. We have to investigate that. Okay, and then so the safe harbor. So if that's for if you could not reasonably hire everyone back yet. Is that true? Is that what it's for, or because of DeWine's incident?
Yeah, if one of the safe harbors is if there is government restrictions that don't allow you to have people back, that's one of the safe harbors you can avail yourself of. That would sort of help you if you didn't hire people back.
Okay, and then so you get 50% off of the payroll, then forgivable, right? Is that what you said?
That's not the interpretation, or that's not the way I would say it. Rather, I would say any reductions that you would suffer to forgiveness as a result of not being able to bring your headcount back up could be offset or exceptions made, accepted over if you weren't able to bring people back because of government requirements. Okay, one question was, I have questions about the EIDL loan. I applied and received an advance that was deposited to my business bank account. If my loan application is withdrawn, or if I do not move forward with the loan, do I keep the advance that was already deposited? Sure, yes. What are the rules regarding keeping the advance versus having to pay it back? If you got an advance, it's a grant. You don't need to pay it back. However, if you got an advance and there's a PPP loan involved as well, just know that the PPP forgiveness is going to be reduced by the amount of the advance. Okay, I think that's the only chat question I had. Does anyone else have a question about EIDL or PPP or any of the resources available from SBA?
Hello, could you put your contact info back up?
Sure.
Thank you so much.
Pleasure.
Hey, Ray, we had a question. You're recording this, right?
We are.
Okay, can we put that up on our websites, the recording?
Sure.
Okay. And then how would we get it from you?
Well, I think we're recording it, Karen.
Oh, okay.
Yeah. And if Ray wants to buy it, if he wants to buy it from us, I would be happy to sell him a copy of it.
You're a funny man. Always looking for a sale.
Ray, you did a phenomenal.
Slides going to be available to the attendees. Is the ECC going to make?
Yeah, sure. I would say if you want the slides, Karen has a copy. You can also email me, raymond.graves@sba.gov, for a copy. Not a problem.
Any other questions?
Raymond, did you? I'm sorry, I missed the first part of it. I apologize. So if I'm asking a question you already went over, did you talk about any future loans with all the rumors going on, or have you covered that?
There's not a lot, Steve, that I can say about the rumors. I pretty much have to adhere pretty much, just to what we've got. I know there have been conversations. Mnuchin has talked about doing some different things, but it would be improper for me to speculate on anything. At this point, there's no universal forgiveness. I think everybody would love that, but we'll see. What we do know is that as of August 10th, we'll be able to accept these forgiveness applications. We know the program is going to sunset on August 8th. So hopefully there'll be more news on August 9th. We'll see.
I'm sorry, I might have missed that. So is August 10th the date that you are supposed to be back to your full payroll?
No, that's not. That would be not correct.
What is
August 10th is when people can submit their forgiveness applications. A company, like in theory, should get back to its full payroll as soon as possible after getting the PPP loan. So if you got $100,000 of PPP, in theory, you would try and bring people back as soon as possible.
Yeah, you're trying to. I have a dance and gymnastics studio. I'm teaching some classes outside because the parents will not come indoors.
Yep,
I have parents who won't come back.
Right.
So, and I have staff I can't hire because I don't have money coming in to pay them with. So,
Sally, one of the things that the people need to understand on this is it wasn't necessarily the policy that it was necessary for employees to be back at work. It was just necessary for an employer to pay them.
Yeah, well, if you don't have the money coming in because you don't have customers, it's sort of difficult to do that.
That's what the PPP is supposed to be for. Is like just like
Right. I
bring
wish I
people on
never got it
payroll.
'cause I would have closed my business instead. It was
But
just
anyway, I mean, regardless, there should be, there's a couple of other options in those rules for you, which should help you. There's a couple of safe outs, a couple of safe harbors. That activity safe harbor is one that you would be able to avail yourself of, I would hope.
okay.
So take a look at that. That's the one where a business gets a PPP loan. It had to reduce headcount, but it was able to bring headcount back up, sort of by the end of the covered period, or I think even you have until, I'd have to look at the actual form, but you might have until like December 31st or something to bring headcount back up,
Okay.
and still get out of any kind of forgiveness reduction. So look real hard at the safe harbors that I mentioned.
Okay.
And I'm not sure whether it's Safe Harbor 1 or Safe Harbor 2, but you'll find that in the instruction form. That should be a saving grace for you there. They'll let you get out of any kind of reduction and get your whole PPP loan forgiven. At least that would be my urgent hope for you.
Okay.
And feel free to reach out to me directly, and we can go over it in detail.
Okay.
Yeah, borrower was able to restore FTE employee levels by not later than December 31st. So we've got some time. So no need to stress right at the moment.
Panic.
We want to get everybody their full forgiveness. We really do. And the bank does as well. So we'll take care of you.
Raymond, it's Karen Johnson with W.F. Hannon Sons.
Okay.
I have a question for you. I know that the rules have changed. Oh my gosh. Every week there was something new about the forms that we're going to have to fill out with the SBA loan. Now I have to wait until I get it from the bank that I went through, correct?
Yeah, the bank is going to be responsible for taking that forgiveness. But as of August 10th, what we're telling the banks is they need to be accepting these forgiveness applications. So your bank should be accepting forgiveness applications on August 10th. If they're not, then let me know, because that's
okay.
Then they're doing something that's against the rules. I would, I'm sure there'll be a few banks out there that'll struggle to figure out how they're going to be handling these tens of thousands of requests, and I get that. They're human too. But as of August 10th, you should be able to, go ahead and submit the application. Now, you don't necessarily need to. In fact, there isn't any real strong reason for anybody to submit a forgiveness application on August 10th. I mean, certainly, if you can, go for it. But if you need more time, or if the bank needs more time, the small business owner has, I believe, something like 10 months following their forgiveness period to even submit it, and you don't have to make any payments, and SBA covers the accrued interest. So, you could wait as well. I'm sure a lot of people want to get it off their books, and I know the banks want to get it off their books too. Nobody wants these ones around. Everybody wants them to get rid of them, move on. But there is plenty of time.
Okay, good.
And some banks are taking it now, correct?
Banks might be accepting applications, like some of their original deals.
Yeah,
the applicant has spent their money, and they go ahead and get the dollars in and accept an application. The August 10th thing is when we're going to be able to accept them from the bank. We're standing up our own system to do that, and we're flexing it out right now. In a week or so, we'll be able to accept these applications and start the money rolling back down the line. All right, everyone. If there's any other questions, so feel free to reach out. My head's been underwater for months, but starting to kind of pull out of it now. So that's why I'm reached out to the Heights Chambers and said, hey, is there something I could do a little, positive outreach for? And they were gracious enough to let me do that. So once again, appreciate all of you, and let me know if there's any way I can help.
Great. Thank you so much for your time and information. You were wonderful.